Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping down into the world of Cardano's ADA, taking a look at what's been going on most recently, what we would expect to happen next, and all that wonderful stuff. As we get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. Okay, let's waste no more time. Let's jump right down into this one. Cardano paired up with USDT on the hourly chart, and Binance is our data source. Now, as you can kind of see, we are following our expectations with this move to the downside, but we did actually first, and I think in actually the last video we spoke about, talk about this high up here. We were expecting this to be the peak, but we actually pushed up just a fraction further here before we started to move down into that C wave. Typical B wave movements. B waves are very, very difficult to get a good grip on because they can be almost any structure. There's very little limits when it comes to B waves. Now, our C wave move to the downside actually has a bit of a broad spectrum, actually. It can be quite deep. So let's go ahead and just jump into this, right? We can go and pull this over. We can see that we're talking about 33.83, this being kind of the typical area that we're going to be looking for. Now, I'm going to just go ahead and move this fib, and I'm going to move it over the side because we're going to need this later, but we really need to focus in on the structure of what is going on right in here, right? Because there's a lot of candle movements in here, candlestick movements, right? And, well, we do have this little area scoped out down here. So I'm going to show you how I got there. We need to, in order to actually ascertain where we're going, we need to jump down into the 15-minute chart. I don't do this very often. It can get quite messy when we do this, but in the case of Cardano here, it's not too bad. We can take a look at this positioning. We can kind of reflect on what is going on in here. We do have this movement from the low. So I'm going to grab a fib. I'm just going to draw it on right there. We'll move this over to our peak of this area, and we can see that we have a bit of progression to the downside here to make this a wave 3 situation, right? So if I zoom out just a fraction, what we can do is we can go ahead and say, look, wave 1, wave 2, wave 3 would have to be down here, then a 4, and then a 5, right? So we haven't met the requirements for that just yet. So, you know, it's important that we reflect that that's a possibility, and it's a possibility because of the structures that we have within here. So I'm going to go ahead and remove this for now, and we'll just keep a mental note on 33 cent, which we actually have already marked up on the larger time frame. Okay, and we want to focus in on this structure. Okay, so we're going to start right at the top here, where we can see these movements. Okay, I'm going to go ahead and put a horizontal ray just at the top here. 36.47 on this particular candle. This was 4:15 in the morning, okay? So UTC, that's 4:15 a.m. UTC. And we can see that this is a big wave 1, 2, and then down here for 3, coming up into 4, and looking for that 5th move, right? So we see this move down here, this being our expectations, right? Now, we've actually just narrowly missed it. So this could be for a couple of different reasons, right? Sometimes our 5th waves end up missing this target, and really we can't see it on the 15-minute. We'd have to come potentially down into our 5-minute chart to really get a good gauge as to why we did this. And it looks like it was more of a diagonal structure right at the end there. 1, 2, 3, 4, and actually it looks like we're pretty reasonable there. So coming up here is going to be an interesting point, but it does look like we completed that 5th wave at that particular point in time. With the substructure in here, we can kind of go 1, 2, looks like 3, 4, and then 5 coming down here. If I actually draw that SU in a good place, that means that this is likely to be our 5th wave low point, just short of our actual target on our 15-minute chart there. So we can kind of see that structure in there. I'm going to delete this because otherwise it's going to get really messy, and I'll take it back up to our 15 minutes. Okay, so we can see that we're moving up after completing this structure here, but this doesn't really look like it should be ending on a 5-wave structure. So what I mean by that is on our hourly chart, we had that marked up here, right? We had this low of 33.83, and in order to make this a giant 5-wave structure, this potentially means that we haven't finished with this downward movement on our hourly chart. So let's come back into our 15-minute chart here, and we'll start thinking, okay, well, if this is the case, then we might be in for a pretty rocky road when it comes to Cardano's ADA here, okay? So we kind of have ourselves a zigzag pattern at the moment, but this could actually just be a wave 1 structure, and it's going to be taking us a bit deeper before it actually gets better. And so we've got to reflect on a couple of things within that. Okay, so let's jump into this, right? So the first thing is that obviously we do have our kind of 5-wave structure up this end. We have the 5-wave structure here. How high is this likely to retrace? So if we go ahead and basically pull from the top to the bottom here, you can see that we've already kind of pushed up past the 382. The 50% level is our current resistance on this wave 4. This comes in at about 35.47, and then we can push up high. Now, the expectation on a bigger move to the downside would be the 36.23 area. Okay, so if we go put a horizontal line right in there at 36.23, that would be the area. Let me just delete the fibs off. That would be the area where we can think of all of this as just being a wave 1, a wave 2, and then we can go down into the 3, 4, and 5s and so forth, right? And we can really start to collapse down in that regard. Now, I don't want this to play out like that, but it does look like we have this kind of really big structured move to the downside emerging here. So we want to be aware that there is this possibility that we end up with this kind of pattern playing out. Okay, so it's a bit too soon. Invalidation for that, of course, would happen at 36.47. So we'll keep a close eye on that. We'll delete this off and we'll delete those ones for now. And then we'll just go back up into our hourly. So now we have a good grip on thinking that this might be the end of our C wave structure. It's possible that it is. Okay, we've completed that kind of zigzag pattern. We don't have to go down any further, but we're keeping a close eye on those horizontal rays. Like I said, our main targeted range is 31.8. Just over here. Okay, so if price was to come down to there, then we're going to be talking about a really significant move to the downside. But at the moment, this is just a zigzag, and that falls right within inside our C wave, and we shouldn't be too concerned going further forward. Now, the positive news, right? Now we've got all that bearishness out of the way. Let's talk about the positives. Well, the positives are that the daily chart is oversold on the stochastic RSI. It's oversold on the 8 hour, it's oversold on the 4 hour, and it's pretty much oversold on the hourly. This gives us some potential move to the upside. So if we have finished this structure as an ABC down here, and we just kind of fell short of hitting those actual targets, then we start to move on up. Well, we could be looking at a pretty decent run up here, back up into our resistances, which would be more aligned to this area here, around 39 to 40 cents, right? Which would be pretty good moving up from where we are. So we're talking about 4 to 5 cents added to the value of ADA before maybe we come back down, because, things have to kind of, respect structure. Market structure is very important. It could be that this is all just an A, B, and C structure taking us down. And this is falling and starting our move into this much bigger C wave structure down towards our accumulation zones again, because we did have good accumulation zones at around 23, but we did move down lower than I was expecting through the overextensions, or more specifically, the double zigzag pattern that was emerging over that side. So we want to be a little bit cautious here, because it's possible that we have a triple zigzag and we continue to move down in a really significant way back down into the lows. My original lows were 22.23, which you can kind of see on this horizontal ray. We've been talking about that for a very, very, very long time. And the move down here is close enough to it that I would be happy to kind of call it the bottom, if, of course, we were actually in more bullish times, and we really aren't. So it does look like we have to have a short-term movement to the downside, back into those accumulation zones where I'm looking and still looking for 2.23 or 22.23, and potentially even down as low as 15.46, although that would be a more bearish situation. We'd have to see some kind of really big movement in the space of all across crypto, really, to kind of bring us down into those levels. So all in all, we're happy to kind of see the price kind of, moved up quite a bit. We're talking about the swing or trade opportunity. It came down lower than my original kind of thoughts of around 27, but we have seen a good appreciation up there at the 40s. And then, of course, we did move down just a fraction lower. So great opportunity to kind of get in on that swing trade, which was fantastic. But we still look for a bit more to the downside, as that is part of the structure. It doesn't look like it's done yet. So let's jump up into our daily chart, right? And we can kind of reflect on where we are. Right now, we're kind of getting hit back and slammed down by the 200 daily EMA. Okay, we can kind of see that in there. But we are currently finding support on the 50 EMA. You can kind of see that red line just in here. This is the 50 EMA. The white line is the 200 EMA. This is the daily chart. So again, we can kind of see ourselves getting sandwiched up in here. But we should be aware that we are not looking overly positive. Now, if I take a look at this structure just here, okay, and we just take consideration of this movement, we have already met our requirements on that as being a fifth wave movement. So it does look like we potentially have a turn here coming in 1, 2, 3, 4, and 5 like this, okay, on our daily. So we want to be aware that although the micro movements are a little bit all over the place, our daily structure here, when we take a look at it, is giving us our indication that we are going down. This could be because this is a C wave movement, our likelihood, and the most likely scenario, as I said before, was that this could be another zigzag pattern. So we come down here in a 1, 2, 3, 4, and 5. We then go up in 3, and then we come down in 5 again. Takes us back into those accumulation zones, right? So that's kind of what I'm thinking is likely to go on here. Now, this is the maximum number of zigzags that you can have in a loan. You can't have any more than 3 as a maximum number. So we've done 2 already, and that took us down to the 23s. And there's no guarantee that we do another zigzag taking us down. It's just one of those things that I'm aware of, the formation of the structures that I am concerned about. So keeping an eye on that. We are, of course, oversold, and we can be oversold for a while. It's not the end of the world, but it is one that I would expect us to kind of bounce upwards. Like I said, that wave 2 would be usually a pretty decent 88.2% retracement of this movement to the downside anyway. So, and that would be pretty good. Now, as we take a look at the volume, you can see the obvious here, and as the volume is decreasing as we're going down, and that also not only accounts for the move upwards, as in we are decreasing the volume as the price is going up, but also as the price is going down, we also see a decrease in the volumes. That actually allows us to think of a move upwards is imminent as well. So as I said, the good news with the bad news is that, it does look like we're going to bounce up a little bit here on Cardano. Now, if we go into the RSI, you can see that it's correcting down quite nicely. Again, we had the divergences, which I'm pretty certain we saw the bearish divergence right up here, the hidden bullish divergence as well. And that took us up into the highs, but the bearish divergence is there. Right now, we're correcting down quite nicely. We're not too concerned about that. I think bounce upwards is probably due towards the 40 cents, seems to be the most logical area to kind of think about where that is going to go, but we'll keep an eye on the structure. 5 waves down like this could be a part of a flat correction, so we should bear that in mind, but I can't see where that would really play other than maybe around here. That would be a situation where it would look like this, and you kind of come out and expand down. An irregular flat is basically what I would refer to as an expanding flat correction. So that's a possibility, but other than that, we should be thinking about the zigzag pattern. I think that's probably the one that actually revisits these lows, which would be tied in nicely with the bigger economic climate that's going around the world at the moment, whether that's a war with Russia, with weather balloons with China, the SEC going after Paxos and BUSD attacking Binance, all the way through to various different cryptocurrency exchanges getting sued left, right, and center, the attack on stable coins, and obviously the SEC's attack on exchanges overall over in the US. There's a lot of really negative things going on. And we don't want to trick ourselves into thinking that there's a lot of volume driven behind these price movements as well, because there simply isn't. We've taken a look at the Bitcoin charts and we know what's going on in terms of who's participating, who's not participating. We do not see big institutional players yet really jumping into Bitcoin. We do see them selling still, whilst retail continues to FOMO in. But again, none of that stuff is really something that gives me the kind of the hopium that we're going to be moving up in any significant way. So when it comes to Cardano, I'm expecting further downside, and I'm looking for some cheaper prices. And I do think that the future of Cardano is incredibly bright. If I zoom out of this daily chart even further, guys, you can then start to pay attention to the bigger macros, which look absolutely fantastic. So the chance to dollar cost average at these lows, 23, 22 cent, wherever it ends up actually going, I think is going to be fantastic. Also to note, guys, I think it's incredibly undervalued as it is right now. I do think a 10x from its current position is a doable thing, just above the all-time high. I think personally, we can be pushing up a little bit higher, towards the kind of $4.84 to $11.54, maybe even higher, and so forth. So there's definitely a lot of potential to Cardano and the native token ADA. So join us in Discord. If you found this useful, smash that like button. And if you're new, why not subscribe? Guys, I'll catch you all in the next one.